when do you think cap rates in the United States for multifamily were the lowest, right? Which means the highest prices. And the answer is March 2022. We didn't buy much at that point in time because we just lost belief in our ability to create value for investors. How much have prices declined by? Well, and so when you ask that question, you have to go back to the first question, which is when was the peak? Because whenever you measure a decline, you have to always measure it from the peak.
And so if you want to talk about the operations, we can talk about that, or we can talk about, what do you keep looking for in next, now that the word is out on what you are doing and other people have followed. What next, right? So of course it's all data backed, but how does your brain go about, okay, what should I be looking at next?
Of course. So, you've had a number of people on your podcast that have talked about, things like rehab. So this property, I must be honest and say there is no horror story to tell. The property actually did what it was supposed to do. Our rehab worked. We bumped rents by $175. So from the very beginning to the end, on the last day, our rehab rents were $176 or $177 higher. So the property did what it was supposed to. It also stayed highly occupied. And you might say, doesn't sound like a typical property. Where's the horror stories? And the answer is this. By stepping outside of the metro, we were able to buy the best property in this small market. And so we didn't have to be stingy. We didn't have to basically buy a really bad property in a bad area. We just bought a very nice property in a very nice area. It just wasn't in Atlanta. And as a result, our process of actually running the property for 4 years was fairly straightforward. So I'll jump over to the second items that you talked about, which is, what about today, right? And the answer is, things have changed extraordinarily dramatically since COVID, right? So in 2019, December 2019, right? So this is probably like 3 months before COVID, right? Yes, 3 months before COVID. Cap rates were low, but they weren't like crazy low, right? So we probably bought the property right in around like 4.7 cap or 4.6 cap. But if you fast forward to 6 months, 9 months after COVID, cap rates were completely insane. They were mad. They were the only word is insane. So many people don't know the answer to this question, and I like to ask it, which is, when do you think cap rates in the United States for multifamily were the lowest, right? Which means the highest prices. And the answer is March 2022. So so we had a few months of, rent decline when COVID started. And by July, people were it was starting to bottom out a little bit. By Q3 of 2021, there was this buzz that was building because, hey, all of a sudden interest rates are at zero, buy. So Q3 people are buying, Q1 people are buying, all of 2021 people are buying, and it's driving up the prices. And at the end of Q1 2022, prices are just completely bizarre, right?
Yeah.
And so what we had to do, Stephanie, is we basically had to stop buying. And so when you look at the number of properties we bought during the 2021 and 2022 timeframe, it's basically 1.5. One of them was our own property.
Yeah.
One of our partners needed to exit, so we exited them and bought it back. We didn't buy much at that point in time because we just lost belief in our ability to create value for investors. And I'm very glad, because during that time, we had access to such a filthy amount of money that there's no doubt we could have bought a property every month easily, right? There was just, investors were just literally throwing money at us, right? It felt bizarre. Because everyone was making money at that point, properties were going up, and people just thought they would keep going up. And so we only bought 1.5 properties, and so we've gone through a series of pivots. One of them was we decided we're not going to invest in ultra hot markets anymore, and so we basically are not buying in the Austins, the Phoenixes. Atlanta's a little bit better in terms of, its cap rates being a little more reasonable, but I'm also talking about something more recent. So during that time, we didn't buy in any of these ultra hot markets, and as you now know, prices have declined. Another question that I think everyone should be asking that I don't, see enough is, how much have prices declined by? Well, and so when you ask that question, you have to go back to the first question, which is when was the peak? Because whenever you measure a decline, you have to always measure it from the peak. Before we continue, let me take 60 seconds to tell you about Multifamily University. Are you ready to take your real estate investing to the next level? Look no further than Multifamily University. Our comprehensive resources, including guest podcast appearances, educational webinars, the Real Estate Trends Toolkit, and the Location Magic course, are all designed to make smart investing easy and accessible. Plus, with no subscriptions, no upsells, you can trust that we're always looking out for your best interests. But don't take our word for it. Check out what our satisfied customer, Carlos M., had to say. Neal's presentation was filled with invaluable information that is not readily available to the average investor. This group takes you to the elite level of investing. Join the ranks of the elite with Multifamily University. Join us at multifamilyu.com and start investing from a place of knowledge today. Not only will you have access to a wealth of knowledge from industry experts, but you'll also be able to stay ahead of the game with our in-depth analysis of market trends and potential recessions or corrections. Invest with confidence and make informed decisions based on data, not gut feel. Don't miss out. Visit us at multifamilyu.com today or click the link in the description below. And now, back to the content. So first you have to know where the peak is.
Yeah.
And then if you say how much of a decline there is. So here's what we did. So the March 2022 date, or the March or April date, the peak is well known because, CBRE has published that, and so have a bunch of other people have published articles around that being the peak. So we went and looked at our underwriting from those days. Even though we were losing a lot of offers, we were still making offers because you have full-time employees and their job is to make offers, even if they're losing them. And so we looked at the cap rate, the going in cap rate in that month for the offers that we made. None of them were offers we won, right? And one can say that we were conservative, right? Because we didn't win any offers, right? And we didn't even get into best and final. So it's nice to look at that benchmark. And then we looked at the offers that we have made in November of this year, of 2023. So now the gap between the two is about 20 months.
Yep.
Right?
Yep.
And the difference is the offers we are making today are 37% lower.
Yeah.
They're 37% lower than the offers we were making in March. Now, does that mean that the market is discounted by 37%? No, and I'll explain why in a minute. But bottom line is, it is fair to say the following words and only those words. The market today is 37% lower than March 2022, right? But if you average it out with the average of 2020, 2021, 2022, if you average it all out, then the market's probably down 17, 18%, because there was this very brief peak where prices became completely crazy. And that was Q4 of 2021, Q1 and Q2 of 2022. And then, so the peak was not very long. So 37% down from peak. But and should prices really be going down as much, right? That's the next question. Is this still the right price? Will they even go down further? And so we do the math on that and we say, what is the right price, right? Forget about what the price was in March 2022. A bunch of us were completely out of our freaking minds. Let's talk about what is a reasonable price for an asset when supply and demand are fairly in balance. There's still a lot of people that are interested in buying. I don't think that goes away from multifamily. So one has to give, some props to that. But, in the absence of crazy interest rates, what is the right price? And the answer is the right price is about 15% higher than it is today. That's the right price. And at some point, we will return to that price. We are never going to go back to a 37% higher, not never, I'd say probably not for the next 5 to 10 years. Another COVID type event has to occur, which will happen. The world economy is increasingly fragile. the only thing banks know how to do when bad things happen is to cut interest rates to zero. So it will happen at some point, but until that next black swan event occurs, prices are about 15% above where they are today. And
Yeah.
what causes them to go to that level is simply interest rates dropping by about 150 basis points from where they are. And so today, anyone that is purchasing multifamily is in a very good position because they have to do nothing, no rehab, nothing, to get basically a 15% bump to whatever that appropriate median price is.
Yeah.
And we estimate that it will take 18 to 24 months for the market to get there.
Yep.
So
Free money.
that's our message today. A lot of people know us for, ranking cities because we rank cities. And my message is today, it's really all about the timing. You are timing the market when you purchase a property today. And there is a way to improve that timing. And the way to improve that timing simply is that you somehow still go for bridge debt by waiting until about April to close the property, maybe April of next year. So we'll talk about that because it's a fascinating angle. But even if you go for fixed debt, which most people are right now bidding out fixed debt, you are still locking in that 15% because the only reason properties have dropped by 37% is interest rates. The demand is equally high. Recently, I bid on a property, Stephanie, that had 34 offers.
Right now.
Yeah, this is 2 weeks ago.
2023. Wow.
No, this was in beginning of November, so about 5 weeks have passed, right? So November is usually, or the beginning of November is usually the last time that you can actually close a property before the end of the year. So there tends to be a little bit of a rush there, and then after that it quietens down because you can't close before the end of the year, and you can't get the depreciation benefits.
So, wow, Neal, thank you so much. This is such a wealth of information. How can our listeners get in touch with you?
So we have a website called multifamilyu.com. So this is a free website. We hold a dozen webinars a year, about 25,000 registrations for these webinars. We discuss the kind of stuff that I've talked about here, but with charts and graphs. So our largest event is actually coming up. It's always around the 20th of January. We call it Real Estate Trends. So we rank all the different cities in the US. We pick our favorites for which cities you should be investing in, and lots of other information. Obviously, this year we'll be talking about the upcoming distress in multifamily. All of that is multifamilyu.com. There is no subscription, there is no upsell, there's no paid packages. We have no coaching programs and no intention of ever creating one. It's just a way for people to get together and meet with us. So check out multifamilyu.com.
I love it. I will be there. Thank you so much, Neal. I really appreciate your time and insights.
Thanks so much. Have a good one. Bye-bye.
Thank you, Neal.